Hey, good morning, good afternoon, and good evening. How you doing? How's everything going? Thank you for stopping by for a dose of education, a little comedy, and some velocity banking, right? So, I want to share with you something that I think will really help the strategy of velocity banking just really sink in a little bit more to really give you that confidence that this is the very best strategy to kill debt, increase cash flow, lower expenses, raise our credit score, all using our own income, right? So I'm gonna do like a video series where I'm just talking about banking, right? How the big banks work their money and how it really is the same to velocity banking, because that's where I got my concept from, basically, is from highly successful individuals and the major banks of the world. So that would go to show you, hey, maybe this kid is talking some truth here, you know what I'm saying? So, banking. How do the banks work? How do they make money? How does it work, right? So look, let's break it down. The way the bank makes money, right? Which I'm going to call their revenue income or their active income, right? It's the stuff that they're doing, right? So they have three ways of bringing in revenue, which is interest, interchange, and fees, right? So the way that I'm going to explain this portion is I'm going to jump down here for a minute, because you guys are already familiar with my little diagram, right? A little triangle, my three arrows, right? So we have activity, right? This triangle is going to represent the bank. Okay, so this is the bank, and this is their activity, which is the interest, interchange, and the fees. Where does that come from? You and I. Okay, so they have customers, right? And the marketing plan or the scheme is that the banks will pay their customers, you and I, to give them money so that they can lend the same money again to a borrower, right? To a borrower, you and I, which we then pay high interest on loans, mortgages, cars, anything you can think of that you could buy, you could finance, right? You could borrow to pay for that thing, right? So what happens is, after they've received your money, right? You think of dad, mom, they walk into the bank. Yeah, I want to get a checking account. I want to open up a savings. I want to save my money, right? I want to, protect it. Okay. Yeah, give me the blue card. I want the blue card. Yeah. Yeah, with the no fees, right? Yeah. Yeah. All right. So ignorant, right? Our parents, they don't get it. But hanging out with me, we're going to change this generation, this millennial generation. We're going to get it in order, and then we're going to get the next generation that much more prepared just by watching this channel alone, right? And understanding just how the money freaking works, right? So, without getting lost, without getting sidetracked, all right? Look, we got the activity income, which is coming from the customers, you and I. When we open up checking accounts, savings accounts, we put our income that we make from our job, right? Goes into there. The bank takes your money, right? Listen to this, ready? They bring it over here, OPM, other people's money, you and I, not the bank's money, okay? And they lend it, okay? So they have an extra move here, right? In velocity banking, they have an extra move that they can do, which is they lend the money out at higher interest and they collect the difference, right? Because they would have to then pay the customer back in form of interest. But you and I both know that since the Fed rates are very low, guess what? So is the obligation to pay their customers is also very low. It's actually almost nothing, right? Less than 1%. Oh, wow. What do you think the bank is charging on those mortgages, on those car loans, on those student loans, on every credit cards, personal loans, right? All that stuff. 6, 8, 20, 15%, right? So they get that money, and what do? Pay their expenses up here and acquire assets. Oh. And then the money, look, flows back here, and they do it again. So that's how velocity banking works for the banks, right? And this is just a little, eye-opener, I believe, that you will see, like, oh my God, like, this is what banks do. Velocity banking. Oh, okay. Now, this activity income, when you relate it to you, personally, just think of it as your job, where you work, how you have your active income coming in. And that's what we're going over today. So the banks, this is their activity, the interest, the interchange, and the fees, right? So interest comes from when they lend money out to the loans to customers, right? Mortgages, cars, all that good stuff. They charge interest on your money, other people's money, not theirs. Then they have fees that they charge the customers to store their money safely with the banks, right? So that could be monthly checking account fees, right? Transaction fees, foreign transaction fees, late fees, penalty fees. It adds up. They say that the average American pays about $200 a year in fees. In fees alone. $200 for the average American. So you take the average household of a family of 4 or 5. So 2 times 5 is 1,000, right? Or if it was just mom and dad, it's $400 a year. Times that by, let's say, Chase has, 10 million customers, or 5 million, or just, what if it was only 1 million? 1 million times $400, right? No, times 2, I'm sorry. What do you get? I don't know. That's a big number, okay? So that's just on fees alone. Ugh. Now get this. The interchange. This is where they hit the business owners, right? Whenever you walk into a store and you swipe the card to pay for their product, did you know that the business owner has to pay the bank just to sell their product? And they'll charge anywhere from like 1 to 2%, maybe more, in merchant fees for every product sold. That's why, some storefronts have like a minimum of like $10, $15, right? If you're gonna swipe with a card. right? Because if you swiped with a card and only spent $2, that company takes a hit. Right? And then last but not least, the interest that comes from all the loans that they give out, all the mortgages, all the car loans, the student loans, the personal loans, the business loans, all that is their activity, is their active revenue income. So for you in the household, think of active income as your job, where you work, where you produce money for the household. And what you're going to do, right, is you have this same triangle, right? And you're simply, this is your active, and here you are acquiring OPM, other people's money, or credit, right? So I'll write that, credit, which comes from the bank, right? Or credit unions. If you watch my video on, how to obtain, a line of credit, go watch that video where I really break it down on like the best personal lines of credit to find to do velocity banking for your household, right? And as you, the individual, you got your activity. You use other people's money and credit to do what? Pay your expenses and acquire assets. Get it? So this is how banks work, right? They make money through activity. There are 3 avenues of active income. They then take that revenue that they make and they spend it, right? Because there's only 3 ways to use money, right? We've gone over this. You can either save it, invest it, or spend it. So in the first process, right, of banking, they get their active income from their 3 streams. They use other people's money to pay their expenses and acquire assets, right? That's the spending portion right there, right? When I say acquire assets, that's when they're investing, right? And then they make more money. More money comes right back, and they do it again. They keep doing it again. And they store, right, all that revenue, right? They store it in the banks, right? In different vehicles, real estate, insurance, banking, right? What are the 3 major financial concepts that never failed? Insurance, banking, and real estate. Am I getting somewhere? I think so. Right? So I hope that helps. I'm going to, like I said, do a video series on this for the next 5 days where I'm just going over banking, right? How velocity banking fits for them, how they do it. And then you begin to see, okay, I can apply this in my household, right? For the wife, the husband, the kids, right? Aunts, uncles, right? So, I hope that helps. I'll cut it here. You have any questions, reach out to me. Hope that helps. I like to break things down nice and easy, okay? My name is Denzel. You enjoy the rest of your day.